You know, kids, yes, I've made $100,000 on multiple weeks out of the past one trading year. And I've been trading for a decade. I made millions of dollars trading Forex, crypto, and stocks. And there are weeks where I make over $100,000, and there's weeks where I lose over $100,000. The past 2 weeks alone, I have made $492,000, even after swaps and commissions. And I want to point out that this is not normal. This is not anywhere near normal. I have never made this amount of money in a 2 week period. And I also need to point out that before I went on this win streak, I lost almost $250,000 over a 2 week period prior to that. All of my trades and all my analysis and all the results are tracked here in my free Telegram channel. I'll put a link in the description so you can join this and check it out. It's just a place where I share my live trades and analysis and insights and stuff. So feel free to check it out. Link in the description or the pinned comment. But yes, in the past 2 weeks, I've made almost $500,000. So after factoring in the loss from the previous 2 weeks, the past month, I'm up about $250,000 net P&L. And again, all this is tracked live here in Telegram. The interesting thing around this is whenever I had first started trading in 2016, back when I was a wee lad, 10 years and 2 months ago, I would have been happy making like, $1,000 a month extra, because at my jobs, I was making $2,600 a month. That would have been crazy for me to have increased my income from 2,600 to 3,600, pressing buttons on my phones, making an extra $250 a week. I never in my life imagined 10 years later where I'm sitting here today on the top of my high-rise building, yelling in a microphone at people on YouTube that I can't see. I never imagined in my life that I would be sitting here making a video, talking with a straight face, making $500,000 in a 2 week period, and $250,000 trading Forex in a 1 month period. That is just insane to me. I don't even know what to say. What I'm going to do here in this video, though, is I'm going to show you exactly what I'm looking to trade this week. I've already made a recap video last week of all the trades I took, how they worked out. My trading strategy is so simple. You can find a bunch of other videos here on the recent videos on my YouTube channel, explaining the way that I trade, because it's basically just buying at support and selling at resistance on the weekly and daily time frames. That's it. It's not much. And you know what? You want to follow the damn trades live, you want to follow the analysis live, just join my free Telegram channel. You can be there in like 5 seconds and you can just follow everything there. I post all my analysis and setups and outlooks. In this video, I'm going to take it step by step, and I'm going to show you every single thing that I do on a daily basis from scratch. Okay? It is not complicated. I mean, if you really try to be a dumbass, then you're not going to be able to learn this, okay? But if you give 2% of a shit and you use 0.69% of your brain, it is not that difficult. I'm not saying it's easy, and I'm not saying you're going to become a millionaire and make a lot of money trading. Trading is risky. Most people do, in fact, lose money. You're probably a dumbass yourself, just like me. You're probably going to lose money trading, because most people do, in fact, lose money. Okay, so that's just the reality. But I'm going to show you what I do and what I've done that has worked successfully for the past 8 years that I've been profitable out of the past decade that I've been trading. So let's go here to my charts. I'm going to go ahead and take everything off. The first thing I do is I start on the weekly chart, and I trade Forex. I trade all these Forex pairs. There's a couple CHF pairs that I don't trade, but all these that you see here on the chart, and then Solana and Bitcoin. So I go to the weekly chart, and then I ask myself, is there anywhere near price where price has bounced very hard before in the past? And if the answer is yes, then I will draw a zone there. Now, an interesting thing we have on AUD Canadian dollar right here is that we have some recent areas where prices bounce. So we've bounced kind of here around this region where those lows were. We also recently bounced here, which is actually a trade I missed last week, because this one would have been good, and I missed out on $100,000. I already made a video about this last week, bitching about it. Sometimes your alerts get triggered at 1 a.m. during London session, and then you don't get to take the trade, and then the exact setup at the exact alert and every single thing exactly plays out exactly as you anticipated, but you don't get into the trade. I could have made $600,000. I can't even bragging to you about making $600,000, but instead I've only made $490,000. I'm so sorry. Suck as a trader. So terrible. So it was a support resistance zone right here. And then whenever we go, we have to zoom way out. Now we've got this high here from back in 2021. Guys, this is 5 years ago, but we should at least keep an eye on it, right? We should at least kind of like keep an eye and see what price does when it happens to get there. Okay, so we've got these little zones drawn up on the chart. And then now what do we do? Okay, this is the super complicated part, so you need to really pay attention here. You need to fight the urge to want to leave this video, and you need to pay attention and not be a complete idiot and just try to listen here for the next 30 seconds, okay? Here's what you do. You set an alert at the next support zone below price, and you set an alert at the next resistance zone above price, okay? You still with me? That's it. That's all you do. What do you do after this? You wait. That's what you do. You just wait. So let's say that price comes up here into this resistance zone. Okay, it comes up there into the resistance zone. Your alert will go off. Your phone will be like, ding, the trading view alert, AUD Canadian dollars at this price right here. Then what you will do is you will click your fat fingers on your phone to go to the AUD Canadian dollar chart, or on your computer, on TradingView, whichever one you use. I use MetaTrader 5 mobile for trade execution, and I use TradingView mobile for alert management and analysis, and I use TradingView on my desktop for analysis and alert management as well. So whatever price gets there, you get the alert, you go to the 1 hour chart. All you are looking for is for price to just start moving away from the zone. Okay, so something like this. It gets there into the zone, and then whenever it gets there into the zone, you just have something like this happen where it kind of falls away. That's literally it. Okay, you don't have to play these stupid games like, but Nick, do you look for the doji indecision, Wagyu beef, fair value, distribution gap, Kobe steak, bullish candlestick entry strategy? You don't need to do any trash like that. Okay, look at the damn chart. You can use the 1 hour or the 4 hour. 1 hour gives you a little bit more texture and granularity. Only if you were using the daily and the weekly zones, meaning the zones that you can see very clearly on the weekly and daily chart. They're just a little bit more reliable in my experience. I can't prove that to you. I have no scientific evidence of that, but I'm utterly convinced that using higher time frame support resistance zones just works way better for structuring the risk on trades and allowing the outcomes to result in more profitability net. So with that being said, you just wait for price to start moving away from the zone. I'll give you an example. This support zone down here, look at the 1 hour. This is a daily, weekly zone, right? We've already drawn that on the chart, and we've got this little support zone down here. So all you do is whenever price gets to the zone, you let it get to the zone, and if it starts bouncing away with just, even 1 or 2 1 hour candles, that is good enough to enter. The only thing you are looking to not happen is to see price break the zone like this and then close below it on the 1 hour. If that happens, just leave it the hell alone. Maybe it turns into a fake out, it comes back. It might do some shit like this where it tries to bounce, breaks below, you don't take the trade or you get stopped out. Then it comes back above the zone. Then it starts bouncing again and going up. Guess what? You can always just re-enter. You can call this the inverted head and shoulders pattern or whatever the hell you want. I just call it, price tried to go lower, failed, came back above the zone, found support, and then it kept wanting to go up. Okay, cool. But all you need is just one candle starting to move away from the zone. That's it. You don't have to play all these games of like the exact Japanese candlestick entry system. You don't have to do any of that trash. You don't need to know any of that. Okay, it's not that important. Just make sure price is starting to move away from the zone. And when price starts moving away from the zone, or should I say if price starts moving away from the zone, you simply enter a trade. You enter a trade to profit from a bounce of the zone. So in this case, it will be a sell. You put your stop loss above the zone. You don't want it to be too close like this, but you also, it just doesn't need to be like so far like that either. You put it above the zone where if price broke the zone, it would be a clear invalidation. You're clearly wrong. We're not talking about something just like that. We're talking about price breaking above the zone and going pretty substantially above it, right? So this is all based on discretion. There's no amount of pip movement. Just follow my free Telegram trades. I've been doing my Telegram channel for like 8 years now. Just scroll there through the past history over the past few months and just look at it. Just you'll see exactly how I do it. I literally share everything. So you do that, you put the stop there, then you just drag the profit target to a 1-to-1 risk reward ratio. Okay, now I know some of you who are indoctrinated by the 1-to-69 risk to reward ratio, Wagyu beef, SMC, ICT, fair value, institutional candlestick gap strategy. You will be saying, Nick, 1-to-1 risk reward ratio is stupid. Well, guess what? Most of the people that I know are profitable are not using more than like a 1-to-1 to a 1-to-2 risk to reward ratio. And I think 1-to-1 risk to reward ratio is way more profitable. You know why? Because even if you are complete dumb, I'm going to try not to curse as much, okay? I'm going to try to calm down just for you so I can teach you this in a realistic way. Just because you're even if you are a dumb person, like me, for example, price goes to the stop loss or the profit target half the time, right? 50% of the time it goes to the stop, 50% of the time it goes to the profit target. What this means in practice, go and test this for yourself with like 100 trades, whether it's back testing or forward testing on any time frame. Roughly half your trades will be losses and half your trades will be wins. Guess what? I have single-handedly, from the top of my high-rise building, I have made you a break-even trader because half your trades will lose, half your trades will be profitable. And if you're, I mean, you have swaps and commissions to factor in, of course. But like, again, if you're profitable trading, those will be small and negligible. But even after swaps and commissions, you're roughly just going to be a break-even trader. And you're not losing money like 90 to 95% of people. What? Like, you can blindfold yourself and enter one-to-one risk-reward ratio trades. Half the time it goes to stop, half the time it goes to profit target. You're a break-even trader. Cool. Without doing anything at all. Without doing all this other bullshit that you see people doing online. And the cool part about this is that once you start getting experience and you're using one-to-one risk-reward ratios and trying to see how things work out, if price starts going into profit, well, then you just hold the trade to the profit target. But if it starts going sideways at the zone and it starts making higher lows and it's trickling up into the zone and looking like it's going to break and then it starts cracking above, well, guess what? You can just close the trade. And if you close the trade somewhere like that, instead of letting it hit the stop loss, now your loss is maybe 1/3 or 1/2 or 2/3 of whatever the stop loss was. And so what happens is your average loss becomes smaller than your average winner. Because whenever you win, you're holding the trade to the profit target. But if you lose, you're getting out of the trades break even or maybe halfway to the stop on average. All right, so does it function like a 1-to-2 or a 1-to-3 risk-reward ratio? Sometimes. All I'm saying is this is a better way of doing it because it allows you to exercise discretion without actually getting stopped out most of the time. And exercising discretion, using your intuition, using your subjective judgment, using price action discernment, using all your applied experience that you've gotten over the course of however long you've been trading, that is where your edge is. Your edge as a manual trader is in discretion. Okay, you can't scientifically quantify this. You can't quantify the feeling of like, I've seen this happen like 100 times before, and I don't think this is a good trade to take. So even though it's at a resistance zone, something seems weird to me, and I'm just not going to take the trade. Okay, then you don't take the trade. Then you leave it alone. And guess what? Sometimes, it'll bounce and you would have been right, but a lot of the other times it would have gone up or gone sideways, been a pain in the ass, resulted in a small loss or a stop out. And you avoided that because you used your discretion to say, doesn't seem like it's a good trade. It also works for profitable trades. You can have a trade going into profit and then you can pull your stop loss to break even for the first position or at least tighten it up. And then you can add another position because you're, say, just more confident that the outcome is going to result in a profitable trade. Then you can add to those winning trades, and now instead of making 1 unit of profit, you make 2 units of profit or 1.5 units of profit or something. Using your discretion is the only edge you have as a manual trader. Okay, you can't code a trading strategy. Okay, I've seen so many people try to do it over the years. All of them blow at some point. Like literally it's hilarious. Every single one of them, even the good ones that work for like a year or two, they eventually blow. It's just very, very difficult, and you really have to be a quantitative hedge fund like the Medallion Fund or Jim Simons' Renaissance Technologies or any of those quantitative hedge funds that have been here for like decades that have spent billions of dollars in research and development and hiring tons of people that are really, really talented and way smarter than people like you and me, coding them in order to be profitable. And even then, their edges that they exploit are usually barely above 50%, but they just do that a million times and they're able to like profit from it. You can't do that, okay? So just shut up and just use your discretion when trading. Get some experience, use your discretion. That is the best way to do it. You're just trying to make a little more when you're right versus what you lose when you're wrong. That's the only way you'll be profitable. You have to treat it like a business. Whenever you have a winning trade, it's like a revenue. And whenever you have losing trades, it's like the expenses, right? So it's like you may have like $10,000 in profit on winning trades, and then you subtract like $6,000 in losses from the losing trades. You still came out in a $4,000 profit, 40% profit margin. That's amazing. So with this being said, this is what I'll be looking to do on AUD Canadian dollar. If it gets to this zone, I'll be looking to do something like this. I'll manage it if it goes against me. Sometimes it hits the stop loss. Okay, yeah, it happens. It's what a stop loss is for. And then other times it'll hit the profit target, and then sometimes I get out around break even or a small loss or something. So that's what I'm looking for in AUD CAD. I'm looking to sell there at that resistance zone or buy here at the support zone again if it can get all the way back into there. Now, since you know the basics of this, we're going to run through the other pairs just in normal time. That way you can see how simple it is for me to do. Okay, so USD Canadian dollar. I have an alert here at this resistance zone because on the daily chart, this is a little resistance zone where prices clearly bounced multiple times. Price almost came here last week, but it didn't quite get all the way to where my alert was, so I didn't take this trade. How sad. Price came within like a couple pips of where I would have entered. That's going to happen sometimes. So that's on USD Canadian dollar. I remain with my alert there. I don't see any zone below price. It could be this. It could be down here. It could be that extreme low down there. I don't see anything, so I'm just going to leave it alone. NZD JPY, I have an alert here at this resistance zone. If price gets there, I will sell with a stop above and a target below, assuming it gets there and then it starts to bounce. Very simple. A GBP AUD. I've got a resistance zone here and a support zone here. I think it might come down to the support zone. So if it does, I will look to buy right there at those lows if we get there and price starts to bounce. Very simple. Euro GBP, same sort of situation. And in fact, a week and a half ago, we almost got here into the support zone, and then we barely missed the alert. It almost came here, but it didn't quite get all the way there. Therefore, I was unable to take a trade. However, I'm still going to be looking to take a trade if price gets down here into this support zone. So I'll put a stop below and a target above. CAD JPY. I was looking at this last week, but I think there's other trading opportunities that are a little bit better. So I'm probably going to be leaving this one alone for now. So that's CAD JPY. And again, that's discretion. I understand sometimes, you'll be thinking like, especially if you haven't gotten a lot of applied experience yet, you'll be thinking like, oh my God, he saw a support zone there, but he's not going to buy the support zone. Nick, you're breaking your strategy. It's like, no, dumbass. It's called discretion. We use support resistance as a way of controlling risk, not as a way of trying to predict price. You don't know what the hell, which way price is going to go. It can go up or down. Okay, it can break zones. It can bounce at a zone. You're just looking to use support resistance as a way of saying, if price gets here and then it starts to move away, I can enter a trade and then I know where to put a stop loss at. I know how much to risk because you're risking whatever your risk tolerance is. For me, I'm risking like 50K to 100K per trade, sometimes even more on certain trades like Euro USD, where I made $280,000 in that one trade over the course of a week. You can do all those dynamically as you start to get experience, but support resistance just gives you a way of controlling risk. There's no predictive edge in drawing these random lines on your chart. Okay, it's a way of you saying I can get into the market and I can control my risk with an entry by putting a stop on the other side of the zone and a target at 1 to 1 or 1 to 2 or whatever you want. So with CAD JPY, I don't know. I don't see anything here. It's technically a support zone and it technically could bounce, but something just doesn't seem right about this. So I'm just going to leave it alone. Euro JPY. Now, I took a sell on this in which I made $100,000 on this outcome right here. When price got into that region, I sold, and I'll even show you this. This is my Discord server where I share all my live trades. So the Telegram channel is a place where I share my analysis. I share the outlooks. I share the recaps. I share the results. I show the trading view screenshots and the analysis, and I give you guys a heads up for everything. My exact trades with the exact entry and stop losses are all called here in this group right here. So let's see. Let's go here to Euro JPY. Okay, 5/5/26 at 9:53 a.m. Central Standard Time here in Texas. It is now May 11th. This was on May 5th. I shared the analysis here in my Discord server, and you can see how simple it is. Look, it's the same shit I'm teaching you guys here right now. It is at a resistance zone, and that's it. That's the whole analysis, right? So it's at a resistance zone. It started to bounce on the 1 hour, so I entered a trade. You can see here my actual trade that I took in my trading terminal. This is Euro JPY on the daily chart. You can see my entry was there. You can see my stop loss was nice and far above the zone. My target was at 1 to 1 risk reward ratio. My broker limits me to entering 75 lots for a single entry at a time. I can't risk more than that. I can't use heavier lot size than that. So if the lot size that I'm using to represent how much money I want to risk on the trade, which for this was $100,000, I have to break it up into multiple positions. So that's why you see the multiple entries here. Instead of like one entry at like 208 lots or 209 lots, you just see 4 entries at 52 lots that way, because for these I was risking 25K on each for a total of $100,000. So you can see, and then I just put right here, I'm short on Euro JPY with $100,000 risk, and all the images and parameters are shown in the images above, which was right here. So what happened with this? It ended up bouncing at the resistance zone, and then it hit the profit target. And I made a nice little profit on this, $113,000 after swaps and commissions, about 110 grand. So a 1 to 1 risk reward ratio, basically. And that was the last trade that we took this last week. We haven't taken any trades since then. This was last week. So that hit the profit target 1, 2, 3, 4 days ago. We're on Monday of this week. This was like, what, Wednesday of last week when it hit. So there's that. And now price has gotten to this zone again, but I did not take a sell entry because something seemed weird about this. With all the big bullish wicks, I thought it might be breaking this zone. So lo and behold, I didn't take a trade. And guess what? It's good I didn't, because it wouldn't have worked out. And even if it didn't work out, there would have been plenty of opportunities to get out of this a little bit early. Like, for example, whenever it breaks above the zone and it comes back here and then starts to bounce, my stop loss on this trade might have been something like up here or something, right? Like just far away from the zone. I probably could have exited the trade like right there. So that would have resulted in maybe a third or halfway to the stop loss, probably a third of the way to the stop loss. And even then, I could still close it right now probably, and it's not even a full loss had I taken that trade. So it works even whenever you suck at trading. You could get out of the trades that are losing. You can hold the trades that are winning. So that's Euro JPY. What am I doing now? I'm going to set alert here at this resistance zone. And then if we get there to that resistance zone and start to bounce, I will look to take a sell. Very, very simple. Comes up there, starts to bounce. Same stuff over and over. GBP JPY is a trade that I'm actively looking to take. We just have to be careful because of those wicks that have like splurged past the zone. It's just like those wicks have ejaculated past the zone multiple times. Oh, my super professional technical analysis. So we've got this zone right here. Prices bounces resistance like 3 times in the past, like 1, 2, 3, I guess 4 if you count that. We broke above the zone, tested as support once, broke back down below, found resistance a couple times before the zone. I've got my alert up here. I'll be waiting to see if price gets there, and then I'll be waiting for a little bit of rejection before looking to enter. So that's on GBP JPY. CHF JPY is kind of far from either zone. I took this trade right here. I took this sell up here. My first entry was over here. It broke above the zone, and I closed at a loss. The second time it broke back below, came up, retested as resistance. I re-entered, and this resulted in a $100,000 profit. If you don't believe me, because you think I'm lying to you, remember, everything that I'm saying is time-stamped in real time. This is CHF JPY. Where the hell is this? Okay, where is CHF JPY? Where did I do this? Here we go. Here we go. Okay. What is it? All right. Time stamped. April 23rd, 2026 at 10 a.m. I've gone short on CHF JPY with 50K risk to make a 100K profit. She's in a good spot. So I entered right here. And you can see I had my stop loss above the zone and my target below. Now on this, I used a 1-to-2 risk reward ratio because I wanted to get out at that exact price. And if I would have put my stop further at $100,000 risk, I would have closed there anyway. So that's why I just decided, okay, I'm going to put the stop loss there and then risk half of what my normal risk is and let it play out. And so that was happening. This was when I was in that crazy Euro USD trade I told you about. And all of this, it started going. Euro USD, I closed. This was that huge Euro USD trade that I closed in profit because it was bouncing in a daily zone. And then we had CHF JPY, which I continued to hold. That was when it was in $16,000 profit. And if you look, this is on the 4-hour time frame, right? So almost a daily. It's just, it was bouncing there at the resistance zone, right? The same stuff I'm showing you, which was right there. It was just bouncing there at that resistance zone. And then it started to go down into profit. I held it and went into more and more profit. This and that. Still holding CHF JPY halfway to the target at $56,000. And then it fell all the way into the profit target. And when you look at it very closely, you'll realize the only thing I did, literally the only thing I did, is I just sold at a resistance zone. I entered a sell at a resistance zone on the daily/weekly time frame. I put a stop above the zone, a target below, and it's going to go one way or the other. This is the simplicity behind it. This is why you don't have to do stupid shit. This is why there are some weeks out of the year where I make $100,000 in a week, or even $100,000 in a single trade, and I just keep doing the same thing on repeat over and over and over and over again. So that was CHF JPY. Now what am I doing? I'm waiting for it to get back to this resistance zone. I'll sell. I was waiting for it to get to this support zone, but it missed this support zone. I didn't get all the way in, so I couldn't get a buying opportunity. But I'm waiting on that on CHF JPY. Very simple. GBP CAD, I'm looking at the resistance and support zone. She's far away from either one. If we start breaking up or down lower, I'll set an alert at one of these zones, and then we will just play it by ear on GBP CAD. Euro USD, I don't see anything right now. We do have a resistance zone right here, but I think it's a little bit more sloppy. I've already taken a trade off of this resistance zone, which was that trade right there. That's the one where I made $280,000 on it. I don't see, I think I'm going to just sit this one out for now, just because I don't know if the zone's like up here or up here at these highs, or like a little bit lower down here. It just looks a little bit more sloppy to me. So I'm going to leave this one alone on Euro USD for now. USD CHF, I was sending this out to a client. This was some analysis I was sending. I don't see any reason to buy at this zone right here in USD CHF. I think we're actually going to be going down. The next zone that I see is right here around this low, which is where I have my alert. So I'm going to be waiting for price to get there and then potentially buy. USD JPY, I don't see anything here except for the support zone where the price is at down here. So that's a support. And then we've got a resistance zone up here. Very similar setup to NZD JPY. And also the other JPY pairs like Euro JPY. So USD JPY, it's not much different. Euro AUD, we've got a support zone, we've got a resistance zone. It looks like we're still trickling down towards the support. It's taken like a month. Price is still trying to get down there. If price gets into the support zone, I'll look to buy if we get some rejection, and then a stop below and a target above. Look how clean prices bounced at this zone before. Just because it's done this in the past does not mean it's going to do it in the future, right? But like, it gives you a good way of controlling risk. You can buy there, put a stop below, put a target above. Very, very simple. AUD USD. I don't see anything right now. Looks like she's going up for now, but I don't see any clear place to get into a trade. We've got a little zone right here, but I don't know how reliable that is. I don't know if I'd rely on that. You need something with a little bit more price data where prices had a lot bigger bounces. Things like this where it like hits the zone and it goes up. This is like 170 pips. Hits this zone and goes down 170 pips. This right here, it's like, you know, it's bounces 36 pips. It bounces resistance there for like, you know, 55, 60 pips. I don't know. I prefer zones where there's been a lot bigger bounces. It gives you a lot more profit potential. So that's what I'm doing. GBP USD, I don't see anything right now. Looks like she might be trying to go up. I don't see a clear resistance zone I can put anywhere here, so I'm leaving it alone. Euro Canadian dollar, I see nothing. That's just me. I see nothing. GBP NZD, we've got a resistance zone way the hell up here, and honestly, it's probably going to need to be around these highs. But that is quite far away from price. This could take a year to get there, or it could take a month. You know, who knows? We've also got a support zone here, but this is pretty far away from price. I'll just set the alert for the hell of it. It's floating here in no man's land. It could go sideways for months from here, so I'll just leave it alone. NZD USD, I see nothing at this exact moment. We've got a resistance zone up here, but we're kind of far from it. But if I do take a trade, it'll be something like this. Yeah, basically like right there. So I'll set an alert there. It's pretty far though, so we'll see what happens. And then finally, AUD JPY, I see no clear trades here. A lot of you will say, but Nick, it's a resistance zone, right? So you can sell right here. The thing is okay, first and foremost, we've got this heavy uptrend going into here. And I know, please, don't get mad at me. Like, right? I use support resistance, sure, but I'm not a complete idiot, right? I'm not blind to the fact that we've been moving in an uptrend forever on the daily chart, right? Since literally April of 2025. So for 1 year, we've been doing nothing but just going up with barely any pullbacks except for this recent one here. I think this is going to break to the upside and go up. Do I see a place to buy? No, I don't. There's no way I can buy and control risk without putting my stop loss underneath that low. And if my entry's here, my stop is down there, my target has to be at 1-to-1, which would be like up here. That's just it's a trade that's just, I don't know. I don't like the parameters for it. It could take too long. It's just stupid. So I'm just going to leave it alone. So I don't see anything there. So if you took anything away from this video, it's the end of the analysis. Just remember, all you have to do is keep things really, really simple and control risk in trading. I've given you a full-fledged setup, and I've proven it to people time and time again by live trading, because I've live traded my whole trading career since I started my Telegram channel in 2018. I would live trade on live sessions with Zoom, but it got kind of like boring because we're sitting there waiting on setups to happen on the daily chart, and we only get 1 to 2, maybe sometimes 3 or 4 trades a week at max. And it's so all I do is everything's time stamped in Discord. I post all my trades there live. I share the analysis and the recaps in Telegram so you can learn from it. I put everything out there, and if you refuse to take this trading approach that I've given you here, and you refuse to even just go and try it, good luck working at McDonald's the rest of your life, because that's probably what's going to happen. You're probably going to fail trading, and you're going to blame every single thing. The trading's a scam. Everyone doesn't know what the hell they're doing, and nobody can make it be profitable trading. All right, like, you know, whatever. Just all I'm asking you to do is at least go and try what I've taught you here in this video. For F's sake, just join my free Telegram channel. Just click the link in the description or the pinned comment. You can be in there in the next 5 to 10 seconds. If you think it's bullshit, you can just leave. It's cool. No big deal. No hard feelings. But it's free. The channels, the stuff I have here on my YouTube channel, as well as the stuff I post on my free Telegram channel, it's all just free resources for you to learn how to trade. Literally, the only thing I charge for right now, of doing all this work for free, like 95% of it free. The only thing I charge for is my Discord server, where I call my exact trades live for people who just want to copy them or see exactly what I'm doing in real time, so they can copy them. I've got clients in there, some of them making $10, $20, $30, $40, $50,000 a month, depending on how much capital they're trading with. Okay, and I got some clients who are trading with like $1,000 account or lower, and they're making like, you know, maybe $100 a month or $200 a month or something like that. Okay, it is what it is. I do 95% of the stuff I do here for free to help you learn how to trade. Why? Is it because I'm an altruistic person, or is it because I care about you? I don't know. I get really effing bored trading. I traded for like a year and I got so bored, and that's why I started Mission FX. And now I've made a ton of money from my business, Mission FX. I made so much more money trading because being a teacher has made me a better trader, because I can articulate things and explain them better. I can put systems in place. I think it's fun to sit here and yell into the YouTube video in front of you and just yell at you about trading. And because of that, that is why I do all this stuff. I post my stuff, you know, here so I can make money, and because I get some kind of sick pleasure seeing so many other people make money trading. So with that being said, if you hit the like button on this video, thank you. I really appreciate it. I will see you in the next YouTube video. I hope you have a great rest of the day. Cheers, my friends. Mwah.